Hey everyone, Dan here. We are about an hour before close on Thursday, April 1st, and wanted to take a look at some stocks that I'm taking longer positions in, meaning I'm planning on holding them for weeks or months and not just sort of quickly swing trading them over the course of a couple of days or even day trading them intraday. So before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also feel free to leave comments below. I look at the comments over the weekend. So if you drop a comment in near the weekend, you'll get a response pretty soon. So, with all of these stocks that we're going to talk about, I'm basically going to look at dip buy areas that I would consider potentially some cut loss areas, though I don't have them for each of the stocks that we'll talk about. But we do have upper price targets that I'll be looking to trim my positions out as we get through those. So let's start off with AMD. With AMD, we are sitting here at this 8102 right now. To me, AMD is looking like any buy as a dip. It previously did go down into my ideal dip buy zone. I was busy watching other things and just with life in general, and so I actually missed it. But it did get into that zone. Obviously not where it's drawn, but it was right here, and then pushed off of it. So that was nice for anyone who caught that dip. Congratulations. What I'm looking for now is potentially a dip buy in this green box here. So that would give us a dip buy down to about mid 78s, starting all the way at about 80. And it may not dip, it may not even dip back down to there, but at some point, it'll keep pushing up and it'll take some sort of a breath as any sort of stock will move like this. So there's always some pushback. It's not a linear direct path up. So, if we get too far away from that zone, then that seems unlikely, then I can readjust that dip buy. But in my opinion, I would be comfortable not taking it on a dip and just using the dip to average down. So for example, if I bought it this $81 right now, and then, next Wednesday it hit $79, I would add more shares then in order to average my cost down. And then the upper price targets that I'm looking for, that 91.43, I would start to trim out there, and then I would plan to start to trim out 95.93, and then again at 100. So those are my upper bounds that I'm looking for, and we'll see a channel form, obviously, as we start to push in that direction, so that'll give us more clarity on where dip zones will be on the elevator up, if you will. With NIO, I know this is a bit of a mess, but I do a lot of intraday trading with NIO, so bear with me because I don't want to lose all of these targets. So on my longer position, I'm comfortable dip buying down through any of these zones here, and even all the way down to this like mid 32 level. However, if it got stuck underneath there and moved more toward 30, I would probably consider a cut loss at that point and look to re-enter when it regains some price strength and momentum. But on the upside, I'm in the near term looking for this 40.90 to develop as support, and then my first price target on the way up will be that $46 mark, and then just shy of $50, and then ultimately looking for the 55 and the 59 range, say in the coming months, for example. So those are my targets on NIO. With JMIA started to have a little bit of a boom today, so that was cool. I tweeted it out and said, something's happening with JMIA mooning, and so congrats for anyone who caught that today. So I entered a position in JMIA today, and basically, it had gotten past this topping out that I was watching and has established above it now. So it gives me some confidence that this might be a more stable uptrend, and that we're going to continue to push up for a little bit longer of a time frame than we have in the past. You see, this is a very clear sad face, right? But I would feel comfortable averaging my cost basis down into that $34 range, and then even all the way down to about $32. And same idea there. If it gets stuck below that $31.89 and seems to be losing momentum, I would probably consider a cut loss and look to re-enter. On my upward targets, I'll be looking at that 46, 51, 57, and 62 as we climb back up to sort of previous recent highs with JMIA. Palantir, also a mess because I treat it so similarly to NIO. I do a lot of intraday stuff with it, so I can't get rid of these, but I'll sort of talk you through what we see. So it's broken this down channel that it was in for several days. I guess it was there since March 12th. And so now it's establishing outside of it. Now the question is going to be, is it going to come back down and start sort of hugging the upper bound of that down channel, or is this actually going to be an establishment upward and will give us some consistent price strength and momentum? So ignore some of these price targets because, like I mentioned, some of those are intraday stuff. But the first price target that I'm actually looking for is that $27 mark, and then the 30 up here. And then I'd roll it up to 35 as well. So basically, I would skip that 31. That's just charted in there for, I think that there will be some resistance points there. But where I would actually trim out is 27, 30.52, and 35.72 to take the profit there. And I would feel comfortable dip buying down all the way through to about this yellow zone. If we start to get too tight and close to 20, that would make me a bit concerned and may look to cut loss at that point. Tattooed Chef is also just leaving its down channel and has had some good news so far this year, but and I think that they are still planning to start their big marketing push. They do plant-based food, sort of a potential competitor to Beyond Meat. And so what I'm looking for from them is to break, this initial sort of push down here. And then I think that there's a lot of run room up to that 23.90. There'll be some friction points like around here, in the $21 to $22 range. It'll hit some friction for sure. But I'm like willing to hold through that friction points and wait till it hits my price target. So 23.90, 26.59, those would be my first couple, and then 29.06 is where I would do my final trim for the time being and sort of like assess what to do there. And I'd be comfortable dip buying Tattooed Chef down to about 17, as long as it's not because there's some like catastrophic news of like a failing company that's doomed. That's what Tattooed Chef looks like for me. With TSM, I dip bought it here, as we were talking about, at the bottom of this very long-term channel that it's been holding since 2020. And so having dip bought it there, it's jumped up here. It did leave a big gap here, so we'll see if it kind of pushes itself back down and retest the bottom soon. If so, that would give another dip buying opportunity at the bottom of this channel. But basically, my plan is to just keep dip buying the lower bound of the channel. If it falls out, I would be looking for it to stabilize around that 113.29. And if it does, then I would take that as an opportunity to average down and look for a new channel to form. If it continues up the channel, my two price targets that I have on it are 135 to start trimming and then 144 for my ultimate upside for this initial play. VIAC, which has gotten beaten down really, really, really badly, I'm looking for it to come up and fill this gap, which is corresponding to this box here. So this is a pretty conservative estimate up to $88, but I would look for sort of taking profit there. But I basically have three zones for taking profit. So 70 would be my first one to start trimming a little bit, and then in that 88 range, and then at 98 as well to close out the position. But 98 would more than double the initial investment at $44. So that's pretty good. And then, with Viacom, I would be pretty comfortable buying down all the way into these price zones here with sort of like a concern for a cut loss, maybe around 37 if it gets stuck at that price and doesn't seem to be able to find a speedy recovery. And lastly, DISCA, similar situation with Viacom, has this rapid and substantial beatdown from about $80 down there to $34.60 at one point. And so it started to recover a bit. So to me, any of these make sense for a dip buy, like at the present time. And I would be happy averaging down, to that 39.14 mark, at which time, if it got stuck under there, I'd consider a cut loss. The upper targets, I would trim at these three areas is my plan. Trim some at 50.71, trim a bit more at 61.84, and then ultimate take profit at 71.11. All right, so hopefully that helps give folks just another perspective. Again, I don't share my trading plans because I'm, giving specific advice on what you should do, and definitely not intending anyone to copy me, but it's just to sort of see what someone else is seeing. Hopefully it provides you another perspective, maybe points out some things that you didn't notice in the chart, and gives you some ideas. But, it's just to sort of like give you more information so that you can create your own plan. In any case, I hope you had a nice short trading week, and I hope you have a nice weekend, and I wish you the best of luck as we kick things off next week. I will see you in the next video.